Hello, everybody. My name is Nicole Elliott, and I'm a technical analyst and private investor. And today I thought I'd have another look at commodities for you, because I see that yet again, some of the biggest names in wealth management are pushing commodities as a good investment product for you to part with your money this year. Obviously, I understand where they're coming from, in that what we've got is stock markets, not sure, all sorts of treasury bonds and normal safe haven instruments at extreme levels. So why not pick something else? So let's have a look. And what I've picked for you are three that I have reservations about, just reservations. They're all front month futures contracts and they're all quarterly charts. I thought, let's get a sense of perspective. People have been dealing commodities for a very long time. So my first chart is that of corn, the front month contract traded on the Chicago Board of Trade, and this is priced as cents per bushel. And you can see on my chart that from the early 70s, it was trapped in a sort of horizontal band, one blip along the way. And then it was only in the sort of August of last year, it really picked up the pace. You could see there on the far right. But it's expensive. It's already been trading up for 7 consecutive months. So the move has matured. So you're not jumping onto something brand new, spangling, bright idea here. It's what we've got. We've already matched the peak that we saw there at 554 cents a bushel in 1996. So will it stall here like it did then, or will we continue up to the 750 cents area, which capped at the sort of peak of the commodities boom between 2007 and 2012? Well, I'd suggest that the probability is 50-50 here, isn't it? Is that a good trade? Not really. Would I do it? Yes, I think it's worth a try, but you must be very quick on your feet and quick to accept losses and that the thing has not gone your way. My second chart is that of soybeans, again, Chicago Board of Trade. And here too, we have a quarterly chart going back to the early 1970s. It too had a sort of seismic shift between the horizontal band that it had traded up to 2004, and then the sort of step up, a half a step up, shall we say, higher subsequently. This one too has been trading higher for 10 consecutive months since June 2020. Remember the rule of 8 to 10, okay? The rule of 8 to 10 comes in here. Add to that the current price of just over 1,400 cents per bushel. We're not far off that upper major horizontal resistance at 1,600. In other words, you have a maximum upside potential of 14%. Your downside is very much bigger than that. I would suggest that if you're not au fait with commodities, this might be too risky for you. And my third and final chart are soybeans, again, Chicago, but this time the Chicago Mercantile Exchange, again, a quarterly chart. And I've plotted here a mean regression. So you can see there's a slight incline upwards to the mean regression. And what we've been doing, we've seen much higher volatility since 2014, especially on the lower side of the mean regression.
30 seconds.
2 standard deviations. I'd say this one, as pig farmers are so astute at managing their herds, is one to avoid. So pigs are a bit tricky. I agree with you there. And I hope to come up with some more interesting and informative charts for you next week. Good luck and good trading. Do be careful out there.